What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So the plan was to cover Neo's earning result today. However, Neo pushed the earning call date out to September 7th. We'll get to the Neo content in just a moment, but we've got to quick talk about the sell-off this week. Both the stock market and crypto, broadly speaking, sold off again for the second week in a row. The reason? Well, Papa Powell here came out and laid down the law in no uncertain terms. Let me play you this short clip from the Friday Jackson Hole meeting. Take a listen.
Today, my remarks will be shorter, my focus narrower, and my message more direct. The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. The historical record cautions strongly against prematurely loosening policy. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
That was pretty direct, and if you recall, just last week before Powell took the stage, I told you that the rally was just too fast and too furious, and that a 1 month decrease in inflation just wasn't enough to justify us returning to a full-on bull market. That's why we didn't push past the 200-day moving average, and that's basically what Powell is saying. Anyone who has been paying attention understood this, and understands that the Fed isn't going to blink or pivot to cutting rates until the inflation genie is back in the bottle, or close to it at least. This address right here was to send a wake-up call to anyone still living in fairy tale land, and based on the sell-off, I'd say that the message is now crystal clear to all. Now, interestingly enough, while just about every sector fell off the cliff on Friday, after trending down for the better part of the week, the SP 500, Dow Jones, and NASDAQ were all down at least 4% this week, right? Now, Neo, on the other end, gained 4.57%. Now, why is that? Well, that's exactly what I want to talk about today. I told you that investor sentiment in Neo is shifting positively, and what I have to share today further supports that view. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Well then, institutional interest in Neo has been on the rise, with some of the most prominent asset allocators significantly adding to their positions. Similar to Bailey Gifford, BlackRock, and many others who have added to their positions during Q2, we now know that Goldman Sachs was also among those who did. They added 5 million shares, or the equivalent of a 20.54% increase from the previous quarter, bringing their grand total to 30 million shares. And if you're thinking to yourself, well, that increase seems a bit modest, let me give you some perspective. They have been steadily adding since at least Q3 of 2021. Between then and now, they've nearly doubled their position, and that is significant. Now, I told you before that institutions spend the past 3 months, and in some cases longer, loading up their bag in anticipation of the various headwinds to continue to moderate. Putting aside the big macro themes like inflation, supply chain disruption, and geopolitical tensions between the US and China as a result of the Russia-Ukraine war, arguably the biggest risk going down the stock is the fear that the SEC will lay down the hammer and delist Neo along with many other Chinese stocks. Now, of course, Neo has stated on multiple occasions that they would remain compliant, but that has not prevented some investors from being skeptical. As of this Friday, August 26th, the US and China have reached a regulatory agreement for auditing any Chinese listed companies in the US, and I quote, "On paper, the agreement signed today grants the PCAOB complete access to the audit work papers, audit personnel, and other information we need to inspect and investigate any firm we choose, with no loophole and no exceptions." End of quote. This agreement has been months in the making, and something that both the US and Chinese regulatory agencies have telegraphed would happen. Retail investors like you and I, who have been paying attention, and institutions who haven't just been focused on the near term, saw this coming. And so it's no surprise and frankly makes complete sense that many have been growing increasingly bullish on NEO and have been adding so aggressively in recent months. This news is a big deal. It essentially clears the biggest risk to investors. And this means that investors can now focus on the momentum NEO is gaining on its global expansions. Things are picking up. Even though they are not set to enter the US market until 2025, William Li was stateside visiting their US headquarters in San Francisco. That location currently houses their R&D center for autonomous driving, but there is more in the works. According to the report, Li and the team visited a few sites with multi-story buildings near the San Francisco Chinatown, the goal being to identify the location of the first NEO house in the US. And that is exciting stuff right there. Back in Europe, just this week, NEO has now confirmed the official market launch date of October 7th for Germany. NEO houses are already under construction or renovation and should be ready for the launch date. Also in October, but towards the end of the month, NEO will officially launch in Denmark, starting with sales of the ET7. NEO will then enter Sweden and the Netherlands to wrap up the year in Q4, though the exact date for those two markets has yet to be announced. I would expect that during the earnings call, we might get some of those details. The bottom line is this. 2 weeks have passed since I last touched on NEO, and in those 2 weeks, NEO put an end to the false allegations published on June 28th that they were inflating their revenue and profitability figures. The report was published, of course, by a short seller to induce uncertainty in an attempt to profit from investors selling to cut risk. Momentum in NEO's European expansion is picking up, and arguably the biggest headwind NEO was facing with regulatory uncertainty is now firmly put to rest. With the listing fears now put to bed, NEO is moving forward with laying down the groundwork for their entry in the US. Institutional-grade investors are liking what they are seeing and voting positively with growing capital allocations. As we look forward, supply chain issues should continue to improve while COVID continues to moderate. It's not so surprising then that NEO expects to build on this momentum and scale enough over the coming year and beyond to have the ET5 dethrone the BMW 3 Series in China. We'll have to wait, of course, for the earnings call on the 7th to see what other surprises they have in store for us and how the financials are shaping up. But when you put it all together, right, and project out a year and beyond, the fundamental picture for NEO is only getting brighter. The last thing I will say is this. The reason I keep highlighting the drivers in the macro, especially the Fed fight against inflation and how it impacts the broader market, well, it's because that fundamental macro backdrop is what drove and continues to drive the reset in valuations in growth stocks like NEO. The window of opportunity to accumulate at a reasonable price is highly correlated, in my opinion, to how long the Fed stays in QT mode, so quantitative tightening. Stocks like NEO, Tesla, and others the channel covers will continue to appreciate, granted at a slower pace, but they will continue to appreciate in price so long as they execute. It's too early yet for the Fed to go back to cutting rates and do quantitative easing. That said, later in 2023 and certainly in 2024, it is very likely seeing that we will be in a presidential election year here in the US. Know what else is in 2024? That's when NEO is expected to break even and start turning a profit. I plan to use the next 6 to 12 months to accumulate beyond my minimum 1,000 share count goal. Loosening financial conditions with NEO at a break-even point isn't when I want to be adding more shares. That's when I want to be taking some profit as long-term capital gains. Now you gotta remember, you build wealth by buying low in bear markets and selling high in bull markets. But on that note, that's it for me today. Don't forget to drop the video a like if it helped you get a new perspective and share it with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.